Guys, Meta and Microsoft just reported, as you can tell from here, they crushed. Well, Meta did at least. Here are the reports. Revenue 44.81. They reported 47.52 billion, a 6% beat. Guys, look at this. Earnings per share of 587 versus 714, beat by 21%. Microsoft reported 76.44 billion versus 73.77, beat by 3.6%. And then earnings per share beat by 8.31, 365 versus 337. Meta is up $60 after hours. Let's see how Microsoft is doing. It's up 6% after hours, $32. Guys, Microsoft and Meta are two of my biggest mistakes I've ever made in my entire life. I bought Microsoft starting at 17 to 20 bucks back in 2012. It got to 60. I thought it was overpriced because I thought it was worth 50. I sold it. I've never bought back in because it just kept going up. Colossal mistake. Just goes to show that you can make mistakes making money. If anybody ever tells you nobody ever went broke making a profit, they're wrong, because your losers are still going to happen. You got to make your winners really run. Second mistake, Meta. I bought Meta on November 4th, 2022. It was my second to last purchase of Meta, but it was November 4th, 2022, the absolute low when it hit $88 a share. I sold it at $195 because it ran up too fast. Never, ever went back down. Absolute stupidity there. That's absolutely dumb. I want you guys all to learn that mistake. Yes, we always complain about the mistakes of, I bought a stock and it went down. This is just as big a mistake right here because I sacrificed how much in profit. I was into Microsoft for $20 a share, $5.45 right now. It would be what? A 25 bagger, 26 bagger in a matter of 12 years. Meta would have been, I think my basis was like 175. I don't remember the exact basis, but it wasn't $88. But I'd be at what? Almost a 10 bagger right now. It'd be a 9 bagger in a matter of 3 years. Big important things to learn and remember from these. Now, these are great companies, guys. These companies are both freaking awesome. But there is a price that's too high for both of them, just like there's a price that's too low for both of them, as we saw in the past. We're here to teach people that process, that idea of saying, don't follow the market price. Because if you recall, in 2012, I tell this story all the time. I told somebody about Microsoft, and there was a tech CEO. He said, Microsoft's dead. I go, how's it dead when its revenue is going up 7 or 8% a year and its profits going up 11 or 12%? Back then, I was a 30-year-old kid who was like, man, this guy's a tech CEO. He must be right. But I still went and bought the stock. Actually, I was scared that I was wrong. No, he was just an idiot. Back when Meta was falling, gotta fire Zuckerberg. He's a moron. What's the news on Zuckerberg now? He's a genius. Why? The stock price is up. Guys, the story on Meta was they were losing all that money from the metaverse. And we kept saying, fine, it's still making a crap ton of money. Who cares? That was our thesis. You can go back and look at the videos on our main channel. It's all right there, proven. That's the big key, but you got to let your winners run if they still are reasonably making sense. Don't stop a compounder. As Charlie Munger always says, once you find a great company, get out of the way. Just let it compound. Let it keep going. That's the big key here. Let's go check out their earnings results to see if they say anything in here. I'm really interested in Meta's obviously ad revenue, and then see their usage per user. Guys, here are the results. A little hard to see. Revenue up 22% year over year. Net income up 38% year over year. Guys, this is a multi-trillion-dollar company. And look what they just did. This is the kind of stuff you see on $10 billion companies, $5 billion companies. They absolutely crushed it. 6% year over year increase in the daily active people. Ad impressions, 11% up. Average price per ad, 9% up. Revenue, 22%. Cost expenses was increased 12%. So they saw a revenue increase of 22, led by cost increase of only 12%. Capital expenditures, oh man. Repurchases of shares, poop. Why are you guys repurchasing shares? Why are you guys repurchasing shares? I don't get why they're repurchasing shares. I don't get that. Let's go look at Microsoft. Now, guys, this is for the year ending because their fiscal year ends June 30th. Okay. Revenue, 18% increase. Operating income, 23% increase. Net income, 24% increase. Earnings per share, 22% increase. What the F, guys? My gosh. Microsoft Cloud revenue, $46.7 billion, up 27% That's incredible. Man, this company. Microsoft's one of the best companies in the world. Absolutely one of the best companies in the world. Let's see if there's an opportunity to buy into them. So we're going to sit here and I want to just show you guys, everything about them. 6 checks here, 2 X's on our 8 pillars. What are the 2 X's? They're valuation metrics, 5-year PE. But guess what? Their 5-year earnings and 1-year earnings are very different. So this is exaggerated really high because when you're taking an average of 5 years, but the 5 years looks like this, your average is going to look down here versus up here. That's the whole key there. So that's an idea. That's a situation in which these metrics don't really matter. Go look at the 1 year. Then go to your stock analyzer tool because that's what's important here. Let's find out what we think Meta could sell for in the future. Now, what I'm sitting here doing is I'm making a 10-year assumption. I did revenue growth of 7, 10, and 13%. Profit margin and free cash flow margin of 27, 31, and 34. Guys, I think I'm being conservative there. PE, 20, 23, and 26, and my 9% market return, no margin of safety. So you need to have a higher percentage here because if you just want 9%, go buy an ETF. So this is no margin of safety just to see what I think the company's worth. Guys, I have a low price of $440, high price of $1,075, middle price of $705. So guys, guess what? Not that far off. It was actually green today before it went after hours here, up $70 after hours. Incredible. Absolutely incredible. Now let's go look up Microsoft because Microsoft is, just an incredible business. 6, 9, and 12% revenue growth, 32, 34, and 36% profit margin, slightly lower free cash flow, even though it'll probably equate out. PE 20, 23, and 26, and also my 9% return. Now, guys, if you're new to this, all I'm doing here is making assumptions about the future because every investment is the present value of all your future cash flows. So if you can somewhat project the future cash flows, then you can determine the right price to pay based on your return. For Microsoft, I'm personally going to put in 12.5%. Might be too much, but if it's anything lower, I might as well just buy an ETF and be done with it. So I hit the Analyze button. I have a low price of $230 to $270, high price of $540 to $580, middle price of $360 to $393. Now, what's crazy about this, guys, is look how recently the stock was. In the last year, it was at $344 just 4 months ago. Not even 4 months ago. Guys, if you like what you're hearing here, this is an analytical and emotional way of looking at investing. It incorporates the story and the numbers. I highly encourage you to keep on watching. Great results. And a shout out to Jerome Powell for not increasing rates. Good for you. Way to stand up against Big Daddy Trump, who I did vote for, but I don't agree with him on rates. Thank you very much for your time.